markets are all very muted today. We are slightly positive now, but again, as I say, light trading. Markets close at 1 p.m. Eastern. Let's bring in David Stryzewski, who joins us. David, you say it's time, right, to take some profits and get defensive. My question to you is why now, and how do we get defensive? How do we do it?
Hey, well, good morning, Ashley. We've just witnessed 33 all-time highs here year to date for the S&P 500. I mean, this is, we've seen a nice upside. Now, we've added about 11 trillion in market cap since the October lows, 33% up. That's literally more than the entire stock market of China. And so we have seen significant increases just in this very short time frame since October. So in my opinion, everyone knows it's an election year. I think that as we look forward here to the second part of the year, we're likely to see some challenges ahead. So how do we prepare for it? I've got three things, and that is risk diversification, strategy diversification, and tax diversification. We all know it's an important election year. We all know that the outcomes are critical. Doesn't matter what side of the aisle that you're on. I think it matters a lot less when you've got the right risk diversified approach. And so cash assets, protected assets, risk return assets. Be very cautious right now about bonds, because I think that we could see a credit system a lot of challenges here, even getting downgrades coming in the months ahead. Strategy diversification. I'm not as interested in indexes right now as I am individual names. If we look at just how the market has done in general, the breadth of things has not been in balance there. And so we think that some individual names, as well as some ideas that can be maybe a little bit more defensive right now could be intelligent, but we want to be tactful and still capitalize while things are moving in the right direction. And then last is tax diversification. We've got two tax returns left before the Tax Cuts and Jobs Act goes away. This is about Roth conversions and Roth contributions. The single greatest opportunity in our adult lifetimes to reduce taxes is here right now, and it will be gone at the end of 2026. So we have
caution is the word.
Yes, sir.
Very quickly, before you go, I want to ask you about, you bought us a pick, which we always love. Give me 1 minute reason why you like Occidental Petroleum.
Well, as we look at the oil industry right now, it's essentially pricing these stocks in like the $60 to $70 range. Obviously, oil's right now in the 80s. So we think that that's a really strong trend that's moving in the right direction there. Real quick, basically, oil's going to be continuing to pay dividends. And we think that Occidental, as well as some other names, are going to be good names to be staying in here for the long haul.
Very good. You got a lot in, David. Thank you so much, as always, for joining us today. We do appreciate a little bit of caution, says David.
Pleasure's
mine.
All right,
Lauren, come back in.